Michael, I'm just going to go through some questions here. Michael, yeah, I'm going to send you, let me write this down. It's interesting because I've sent out, when we released the new version of Orderflows Trader, I've sent out everybody the links for that, like the whole entire week. Let's see, how would you use a conjunction with buying and selling tails? Blessing asks, how would you use this in conjunction with selling and buying tails? Well, I don't know if I got tails turned on this. Well, let's go back to the Dow. Okay, so for example, okay, I'm not going to talk about inverse imbalances now. I'm going to talk a bit about tails. I don't have tails loaded up on here, but you should be able to see where they occur. Okay, so this is a selling tail right up here at the high. Right, I know it's a selling tail because I see the 2-0, it's highlighted there. If I start to see value migrating lower, right, if I start to see a gap, yeah, I'd get short, right, just as I would get long if there was a buying tail somewhere, and value starts moving higher. Let's see if there's one in here. You know, here's got my crosshairs to white. You know, I loaded up an old chart that was black color, then I started changing things to white. I changed everything except the crosshair. So this is a buying tail right now. I've seen the value area gap up here, okay? But again, if you're seeing a buying tail, really you're just waiting for the next bar to move higher, right? Just as here, right? You're looking for the next bar to move higher, then it sort of went sideways, fell down. But you're looking for that market to just start to move away. Oftentimes you're gonna get the buying tail outside of the value area. Right, here's another one here. Market, little move up, little move up, move up, no selling tail there. And this is on the open already. Can you simplify how you determine the bid-ask size information? Okay, Dana. Well, really all you're looking at, when you're looking at the bid-ask data, you're not necessarily looking at every single tick that goes through. You don't want to be making more work than is necessary. Really what you're looking for is volumes that are bigger than normal. You're going to be looking for imbalances. And when I say volumes bigger than normal, right, all you got to do is look at it in relation to earlier bars. You know, is it more than normal or is it, you know, lighter than normal? Okay, so for example, see if there's any easy example here. There's nothing major happening. I mean, normally you're going to get the most of the volume occurring inside the bar, but if you're sort of near the edges of a bar and you're seeing, you know, heavier volume than normal, pay attention to that. Okay, oftentimes, you know, a clear sign is going to be the value area, because the value area is generally going to be where the most volume is. And what day was this? 31st. The way this market's been recently, it's been, you sort of get these bars with thin volume, then you get bars with heavy volume. But something like this here, right? This bar, this red, excuse me, this red candle. Okay, so what do I got in here, right? I've got this imbalance appearing up here at the top, right? It's a red candle, so the market turned down. And normally on red candles, right, somewhere up near the top, you're not on the top offer side as opposed to the top bid side. You're not going to see heavy volume unless there's someone with supply in the market, right? And when you see an imbalance like this, a buying imbalance, is what we call a second slot imbalance, which is a bearish signal. That's what this red thing is drawn here. But normally 162, right? You don't see that type of volume in a lot of these candles. So the market's already moving lower, but here, right, you don't see much volume up here. You don't see much volume here. Here's only 103. Here's, you know, 115. Really, what you're looking for is the top 2 or 3 price levels, right? Just as on a green candle, you're looking at the bottom 2 or 3 bid levels. So top 2 or 3 offer levels, bottom 2 or 3 bid levels. You're looking at certain spots in the bar for, you know, heavier than normal volume or the most volume in the bar. Okay, so that's, you know, in short, I mean, there's more to it than that. but that's one of the ways that I would do it. Edward asked, what are the red arrows and green arrows? So there's like different arrows. They mean different things. Like this orange one would indicate market weakness. So I'd be looking for the market to keep selling off, and it's red through the delta. These red arrows or like these green arrows indicate imbalance reversals. It's reading what's happening in the imbalances in the bar for a potential reversal. So there's sort of different signs of, we just highlight these things because, the markets move fast, and oftentimes trying to put everything together at once is difficult. So, when my first reason that I created the Orderflows Trader software is specifically to help me take these trades that I might overlook, or by the time I realize it, it's too late, right? Like, for example, if I see this market selling off, the market's already weak, but I could see based on the aggressive selling, or sorry, the aggressive buying that's happening, that the aggressive buying is getting weak in here. Then by the time I notice it, the market made new lows already, right? But having an arrow drawn, right? It's not a red light, green light system, right? I still got to analyze what's happening in the market. It's going to tell me, hey, you know what, you got market weakness here. Now, I might not want to take it because we're coming into the lows, but if the market is rallying and I get, a sign of market weakness, then yeah, I'd probably be looking to take the short, right? Again, I'm not always keen on selling into new lows, but at least I know there's some weakness in this market. And maybe if I see some other things in the order flow, I may want to get short or do nothing. Brian asked, multiple interesting trades. Can you show what settings you use on the 1 minute E-mini? Well, Brian, the 1 minute chart, right? When you load the indicator, all the defaults for the indicator is all set for a 1 minute chart, a 1 minute E-mini chart. And in the past, I would use the same thing for crude oil, but obviously now with everything happening in the world, crude oil has been a lot more volatile. Whereas, in the past, I would use the same settings. Well, let's wait for the chart to come up. Which setups are more important when in trade? What to look for, ignore? Well, that's an interesting question. Basically, what I'm looking for when I'm in a trade, what I'm watching then is obviously imbalances, right? Because say you're long and you're starting to see selling imbalances come in, that's not a great sign unless it's this, unless it's like absorption happening. But if the market is getting aggressive to the short side and you're long, that's not a good sign that you want to stay in that trade. Then obviously I'm going to be watching what's happening in the delta, right? If I'm long, I want to see the next bar have positive delta and the next bar after that have positive delta. If I start seeing shifts in the delta, once you're in a position of, either getting weaker, or if you're long, delta's getting weaker, still positive, but getting weaker in the sense that, it's not as positive as earlier, that's a worrying sign. And obviously if it turns negative, that's not what you want to see. If if we'll be watching point of controls, how are point of controls appearing subsequent after getting into a trade? If point of controls are migrating higher and you're long, that's a good sign. If you're starting to see lower points of controls, price and volume is going lower, then that leads into what's happening in the value areas. Are the value areas going lower, or are they overlapping, or are they going higher, right? Depending on what position you're in. If you're in a long position and they start overlapping, okay, the market's probably could be just be going sideways right now. Are the value area highs in the bars a little bit higher than they have been, or are the value area lows lower than they have been, or are the whole value areas going in the opposite direction. So, I don't want to say it's a holistic view, but you're sort of, it really becomes sort of second nature. You're sort of watching what's happening in it. And I do get that oftentimes, in fast markets, it's difficult, in the heat of the moment, you want to be, you want the trade to be going in your direction. But, for example, here, okay, right? So here's, a couple green arrows, okay, the imbalance reversals, right? You're getting long, right? So you say you're getting long in off this first one, okay, and you're long from what, 25? We'll call it 25. Make it simple. Okay, it's a nice move up. Market's still moving higher because remember, right? You're getting long at 25. This market opened up down here. Okay, so it had all this time, put in this value area. The point of control of this bar is higher than the previous bar. The bar ends up with a nice positive delta of 78, right? And then the next bar, again, point of control down towards the bottom, close higher. We're still closing in the value. And then you get this red bar here, right? Now you got a tail here, bearish tail. You've got a bearish EVA, right? That's this red value area. Obviously, point of control is right around the same level as the previous bar. Now you're still above your 25 entry, okay? You really just got to wait and see, right? One thing, I'm not a big fan of immediately moving your stop right up, because what's going to happen is you're going to get a bar like this where it trades right to your entry and then takes off. Now, the next bar is a green candle. Okay, still inside, but what are you starting to notice? Nice positive delta of 28. The previous bar had negative 18. Point of control is higher. Now, value area is still overlapping. It's still an inside value area over the next bar. Okay, it's still bullish. I said, one red candle doesn't mean the end of a trade, right? A long trade. It's because you got one, oh my gosh, I got one red candle, I gotta get out. Even though it's got a couple bearish things, you still need the order flow to confirm it, right? If this next bar starts trading down, right? If it starts trading down to 28, 27, yeah, then I might be a little more concerned, but it's a green candle. Then this next bar opens up, it opens up higher, immediately trades down to 25, but you're left with a buying tail here, right? Then you got a bullish point of control. That's this green point of control here, right? Value area is still overlapped. And the bar closes green. You still got a positive delta of 7, okay, which is tiny. But you should still be in this position, okay? Then you start seeing, okay, you got the next bar comes in, point of control higher, that's good. Obviously, the value area is higher, nice positive delta, buying imbalances. Okay, then in here, you're starting to see, more buying imbalances, point of control higher. Then you start going inside, right? You got this imbalance reversal here. You've got the value area. It's overlapping by 1 or 2 ticks. Point of control is lower. Okay, negative delta. Then next bar, inside, smaller bar. It's inside of the previous bar. Value area is inside, point of control at the same level. All right, so now I'm starting to see values forming up here, because when I start to see value areas becoming aligned like this, it's telling me the market is balancing. Okay, so now I know we're trading 56, the market is potentially balancing in here. And then, the red candle down, the negative delta, the bearish EVA, the lower point of control. When you get 2 point of controls lined up like this, I always watch the next bar where the point of control appears. If it's lower, that's not a good sign. Now you're starting to see point of control from 60 down to 56, down to 52. You got the bearish EVA. Now you should start thinking about getting out, because even though you got that positive delta of 8, it's kind of small. So you got selling up here right after you made a swing high, got more selling up here. You should be looking to get out somewhere in this bar, rather than let the market come all the way down to 25 and then come back up. Oh, this is where you get out. No, you should be looking to get out in this bar. Raj asking, is it Ninjatrader? Yeah. Well, if you buy the software, you don't lose access to it. So you can run the software on the free version of Ninjatrader. I got traders that trade in markets that isn't supported by Ninjatrader brokerage. They just use their broker front end to execute the trades, and they just use free version of NinjaTrader. Of course, you gotta get a data feed from like Kinetic or IQ feed. And then you just run my software on there, but you got to buy my software, but you don't lose access to it. Okay, babe. So Michael Kempf, babe, I'll send you guys the new version. Rob, what's the best time frame for NQ? Gosh, honestly, the way the NQ moves now, I don't look at it that much. I do look at it MNQ, but I use MNQ on a 30-second chart, and even that sometimes is too volatile. Honestly, I don't really spend much time on NQ or MNQ. I just find there's other markets that move without all the heartache, move nicely and follow order flow a bit better than NQ. It's just a little bit too volatile for me. Yeah, Jack, it does work on wheat and corn and beans. Obviously, right, nobody, until this whole Ukraine situation blew up, no pun intended, wheat is a great market for trading. Order flow, wheat, and a lot of the grains are, but obviously wheat, when it started running up into those limit up days, you can't do anything. But now it's sort of coming back to a bit normal wheat, but it's still kind of thin. So you can see here, right? You're still getting a lot of areas with very little volume. If you watch the depth of the market on wheat, you can see that the bid offer is, almost a penny wide. Trades in quarters of a cent. And then even in the order book, there's hardly much volume in there. But on something like wheat, you could use I use 50 and I use 100 range charts. But if you were to convert to a 100 range chart, okay, now you're getting some decent bars. Right? You can start to see things a little bit clearer, like especially with the value areas where they're gapping down like this. Right? 'Cause I don't have the so on a 100 range chart, you're starting to see some, sorry, 100 tick chart, 100 range chart would be useless. You're starting to see these gaps in the value areas, and you can ride these trends a bit nicer, right? You're starting to see sequencing coming in. On markets that are liquid, sometimes it's best to go to either a range-based chart or a tick-based chart. That's just my opinion. Okay, in terms of interest rates, Jordan asks, ultra bonds, ZN. In my opinion, the most useful, okay, is, well, if you're looking at, we'll go to 10 years first, right? Ultra bonds is a great market. I mean, there's a lot of things you could use in there. It follows order flow terrifically, but if someone were to say, Mike, you have to trade one market and the market is 10 years, I would use a range-based chart, because you can't look, 10 years is a very deep liquid market, okay? And you can see the volumes that trade in there. This is a 4-range chart, and you're seeing 1700 versus 165. You're seeing volumes in there, 4,000, 6,000, 5,000. And, even on slower days, you're seeing volumes of like, 10,000, 18,000, but the market's moving, quite nicely. And, when you're looking at order flow, right, you want a market that is going to follow order flow. In 10 years, you don't really have a lot of the retail participation that you do in other markets. And, as a result, since it's majority, I'd say it's probably about 90%, 95% institutional trade in there. I mean, there are people that I know that trade it on a retail level. You're watching what's happening in the volume, okay? And you're looking for, certain things in here. Like I'd be looking at market weakness, right? These blue arrows, right? Imbalance reversals, these green arrows. And for me, I'd be looking at these exhaustion prints, right? This 3 lot, right? Coming, this 5 lot. This is what an exhaustion print is. Because you're talking about a market that trades thousands at a level, right? This is the exhaustion print here, right? So set to 9. And it just comes down to a swing low and trades 3 contracts. Normally at each price level, you're trading 1100, trading 3000, trading 1300, trading 270, trading 1500, 1900, 399, 25, 31, 28. And it just trades 3. Here trades 5. I find that these offer great reversal levels. These are great spots for reversals. And in the difference with that and say ultra bonds and regular bonds, the ZB, is it trades less volume, right? So for example, if you go to say, well, let's pull up ZB. I got ZB here. The volume is lesser. Volumes, when ultra bonds, took off more mainstream, volumes in the regular bonds, kind of shifted downwards, in my opinion. Now, again, this was Friday, which was non-farm payroll day. But if you go back, these other sessions, here, well, that's the evening session. But if you go back like the day before, I'd be looking for the same things. Here's a 6, right? 6, right? Came down, tested it again. This was a 6 here, 6 here, 1, 1, right? You could adjust the level, 4. It just makes for some pretty nice potential reversal signals. And ultra bonds is going to have less volume, but that's what I would use in those. To me, that's my favorite. But the problem is trading a market like ZN 10 years is very slow. You got to have the patience to withstand it. Benjamin, what create a cheat sheet? Yeah, that's a good idea. Create a cheat sheet of all the indicators in version 5. Yeah, I could do that because, again, at the end of the day, though, it comes down to finding parts of the order flow that resonate with you, that make sense to you, that you want to use it. Like I know that for liquid markets, looking at market exhaustion, to me, it makes perfect sense, right? Because I've sat in front of the screen for nights, for years, all night staring at the 10-year markets, right? And I know that when I see little volume trade at a level and the markets start moving away, that the move is often going to keep going in that direction. So sometimes it comes down to finding, the 1 or 2 things that work for you. It's not about everything is going to be working for you at once, but finding something to focus on and then building from there. But that's a good idea, Ben. I'll try and get it. Bob, I was away for a while. Did you cover how to position the sequence tool away from the bar? I have other off tools that get overlapped with the sequence tool. I need to reposition. Bob, I'm not sure what your question is. Send me a screenshot. I think that's easiest. Brian asks, that was great. Watching your thought process in the market open for the first 2 hours would make a great teaching webinar rather than scanning. Yeah, Brian, it's always been my plan to sort of stream stuff. I bought everything for it except the computer that I got. I bought these 4K monitors, but I think my graphic card on the computer I got for that isn't supporting it properly. So give me some time until I get a new graphics card for that or upgrade that PC. But I do want to do some streaming. I think that'd be most useful. Pepe asked, no, I don't, it's not on Sierra charts. There's versions of footprints out there for Sierra charts, but my tools aren't available on Sierra charts anymore. You may see my stuff with another company, but I don't have any relationship with them. Theo, is soybean meal good contract to trade? Yes, it is a great contract to trade. It's one that I don't talk about much because it doesn't, it's not a glamorous market for a lot of people. Like a soy meal, what the heck is that? But it's something that I'm active with it, and in my opinion, it follows order flow nicely, especially when you see big size coming into the market at certain times. Now, there's certain things I like to look for in soy meal, but maybe I should create a separate training on that. But it's a great market for trading. One tick in soy meal is $10. So, if you're getting these moves that are, a dollar, sometimes you get, a dollar, $2. But the thing with soy meal, sometimes it goes into these quiet periods as well, where trading is kind of, for like weeks and months where you're sort of tight ranges. But now, with all the volatility in the markets, in the sense of nobody knowing what's going to be happening in the Ukraine, in the supply chains and all that, you're getting some nice movements in soy meal, especially if you're positioned correctly. But I like to look for imbalances in there, and things like sequencing, etc. But yeah, soy meal is a great one. Philip asks, can you use order flow for spot forex? Okay, Gord, that's probably why Ninjatrader doesn't support 4K yet. Did the same. Philip asks, can you use order flow for spot forex? If you're going to trade forex, you best. I don't trade forex, but there's currencies. There's a euro currency future on the CME that you can watch. I know guys in China that use the software. They trade forex, but they watch the CME contract. I mean, even though obviously forex is a slightly different market, the futures and the actual forex market are obviously highly correlated. But I know I have customers in China that don't trade the futures, they trade forex, but they follow the currency contracts on the CME. They don't trade the CME, they trade the forex though. Use the same settings as ES. Well, for soy meal and ES, I adjusted a little bit because obviously for soy meal, you don't have as much volatility, you don't have as much volume. Actually, you got more in my opinion. It's a different type of volatility, I think, than what you're looking at in, say, the E-minis as opposed to soy meal, right? Because it's got less volume. So once it starts moving, it can move pretty quick. Okay, so like this is a 1 minute chart Fridays. Let's, activity. So, you're seeing some bars, obviously you're going to get smaller volumes, right? 7, then the next bar is 157, right on 41. So you're probably going to want to make some changes. One of the things that I've been doing with soy meal, go here, right, is I'm not going to use exhaustion print of 9 because obviously the volume is lighter. I use a smaller exhaustion print. 3, I don't use market sweep detector. I don't use this. I think I got 0 prints turned off. Yeah, 0 prints turned off. And this is volume imbalance. You might want to. One of the things I've been playing around with lately is using a higher imbalance level. Instead of 300 or 400, I use a higher one. I'll let you play around with that. And what other little things in here? Prominent point of controls. I don't use a 3rd level. I just use the first 2 levels. But yeah, there are some slight differences. Okay, Larry asked, can you show an example using MNQ? Okay, sure. Sorry, NQ or MNQ? What is it? NQ. give it a moment to load up. This is a 1 minute chart, so it's going to take a while, but let's see if I can switch it to a 30 seconds. Do I own or lease a seat? No, Jordan. I don't. You know, honestly, now commissions are, I'll say low, but obviously if you have a seat, it's much lower. I remember the days when, you know, it was like $20. You know, when I worked at EDF, man, years ago, they had bought index futures, they had bought, you know, Jack Carl futures, and yeah, there were brokers there. I mean, I wasn't a broker there, but I was working on the trading desk, and you know, in the other section, I see these guys coming in at 7 in the morning, and you know, they just, you know, they have their customers, and you know, they're charging their customers $20-$25 a round turn. I mean, now it's, you know, basically what you're paying through these retail brokers is tiny. You know, I remember when I was at Dean Witter, and you know, we were allowed to have our personal accounts, and I was paying like $5. This was back in the early 90s. After I left the floor and straight upstairs, you could have your own personal account, and you're just paying basically, I don't think what the term was, X local or something like that. But yeah, you're paying like $5. So, and that's when the S&Ps are trading like 300, and it was like $25 a tick. So, you know, if you're just sitting there on the machine at night, you know, trading your own account, it was a pretty good deal at that time. But here, so this is NQ. Okay, so this is going back to the inverse imbalances, right? This is a 30-second. But again, you know, the problem is if you're on a 1 minute chart, you know, some of these bars are just gigantic, right? You're talking, this is a 30-second chart. What is that, 749 and a half to 764. You know, that's what, 15 points. So, you know, it's that I don't want to go down any shorter to a 15-second chart. I think that's too short. But, you know, I know good people that used to trade NQ on a 20 range chart, and all of a sudden now they're trading a 40 range chart, right? Because on the 20 range chart, when things started happening in the last month, they were just getting killed. They're getting chopped up very easily. So it's harder, but you know, this is the inverse imbalances that I was talking about earlier, right? This is NQ, right? And you know, the EVAs and stuff like that. You know, there's another bullish one here. Here's a bearish one, and it's just like making the moves in one bar. You know, so it's almost, you know, it's always nice, I guess, to get into a trade and out of a trade in a single bar. But you know, this one you wouldn't have taken because it didn't go any higher. This one you got here, you got a nice run up here. Again, then you get another one here, another bullish EVA. Market dipped down and came back up. This is where you just drop your buy stop right up here at 35, 14,835. You know, it makes the move. But you know, this one bullish EVA, but didn't go any higher here. Right, again, just the bullish EVA. You know, you're long. You're just dropping your buy stop at 64. So anyway, guys, you know, that's, I forget if I, in all honesty, looking at a 5 minute E and Q chart, I think is not practical in order flow. And the reason I say it's not practical is because really with the NASDAQ, you'd have to turn your monitor from landscape to portrait size to fit it in there. I mean, I can try, but there's just going to be too much information on there. So let's see, it might even take a while for this chart to come up, but we'll give it a try. All right, Philip, thanks. Yeah, Ben, that's a good idea, starting point. see here, cheat sheet starting. I'm just making some notes here. But we'll see how long it takes if this chart comes up. Because, the problem is, right, it's going through the tick data and it's trying to load. And again, I don't advocate open up all new charts during trading. Like for me, right, I have my charts for the market and I don't deviate that much. I don't switch charts during when the market's open, right? Just keep it the same and just keep it running. If anything, I may open a new chart, right? If you use the tabs down here to open up a new chart, I just switch back and forth, between the charts rather than having to reopen a chart or change the time frame on a chart. I just find it easier to make it that way. Well, on my trading computer, this is my like, what do you want to call this, the work PC or whatever. This is the 5-minute chart. I had about 20 or 30 tabs open, so it's about 20 or 30 charts. It does take a few minutes to load everything up, honestly, but and I keep that one running pretty much all week. I might shut it down midweek and restart it, during because on Tuesday nights I do a weekly training session, and because I started turn on my machine, I'll turn it on today, Sunday. I usually turn it around 3 or 4 in the afternoon for the 5 o'clock reopen. Then I'll usually keep it open until Wednesday. Then sometimes I'll shut it down Wednesday afternoon during that recycle period, and then run it back up again. But it doesn't lag or anything like that. But Jordan, do you keep? Yeah, I keep multiple charts open. But again, I've got multiple screens as well. People say, well, you don't need multiple screens. Well, yeah, you don't need it, but it's nice to have. I like to sometimes, some things are happening in one market that I just might overlook. I don't limit the number of bars per market, but days, I don't, sometimes people like to they'll load up a chart, right? And they'll have this one days to load. They'll have it like set at 30 or something. And I just keep the last day too. I think the default that I use is 3, which is fine. But this is a 5-minute chart. Now you can see it covers a lot of space, right? Obviously on some bars are going to be, it's hard to read if you're trying to look at a footprint on a 5-minute chart. You could adjust the font size of a footprint to smaller. Like for crypto, I think I got it set to 8 for Bitcoin. But if on some of these other coins like ETH and Doge, that got smaller ranges, I keep it at I think 12. I think this one is set to 14. But yeah, there's a question in there I saw about crypto. Where was it here? I can't find it. But yeah, do you trade crypto markets? It's you can follow order flow on crypto, and really, in my opinion, it's with crypto, it's sort of like going back in time to seeing, because you're just basically looking at the big volumes. Now, obviously, there's some limitations with crypto in the sense that, for Americans, you can't be on the biggest exchange, Binance, right? You got to be on Binance US. But the data, Binance itself, the main exchange trades the most volume in the world. Coinbase is like second. Some of these other exchanges are coming up. I think FTX is also rising in the ranks, but Coinbase right now is the second. You can get the data for free from Ninjatrader. It'll connect to Coinbase. So, again, if you're not familiar with it, you just go into here, right? You just change your connection to my Coinbase. You may have to configure it up the first time, but again, there's no username or password you got to enter. But they got the historical data, the historical tick data. But I use it. I got one running 24/7 there. The only time it goes down is if Windows decides to upgrade itself. But yeah, you're looking for the heavy volume. I like to look at value areas that are untouched as the market comes back to it. There are things in crypto order flow that I think are significant. But anyway, guys, I'm going to end it there for today. And again, if you're interested in the software, I see a lot of these questions. Some are coming from users, some aren't. And if you're interested in the software, we got the special deal. Just go to orderflows.com/off5, and you're going to get a lot of stuff. Just a one-time payment, $7.49. So thanks for attending, and have a great weekend, guys. Bob, if you're still there, send me a picture of your chart so I could understand your question a bit better. And Babe and Michael, I'm going to get you guys those download links. But have a great weekend, everybody, and take care.